Welcome to the Airme Roundtable. Today's the 9th of March, 2022. So we have a special guest, Steve Ganz. He's been kind of tearing up the butterflies and letting everybody know how he's doing and doing a great job and hanging out in Trading Group 1, and everybody likes what he has to say. So today's a little bit of expanded butterflies from Steve. So we're looking forward to it, Steve. So welcome.
All right. Well, thank you so much, everybody. I really appreciate it. And as you can see, I have a poll up here about favorite trades. I'm going to end the poll now, show everyone the results. And the results are pretty cool. I like the fact that a lot of people are looking at multi-leg trades here. Obviously, that's what we're going to be talking about the bulk of today, but we're going to compare how some of these multi-leg trades, specifically butterflies, end up comparing in these volatile markets to some of the other things that that people are trading here, short credit spreads, verticals, etc. So I'm going to stop sharing that particular poll. I've got a few more questions that I wanted to get in here that's going to kind of help us focus our time together today. So this one is about, do you trade stock, futures, index options? What seems to be the vehicle of choice? I'm guessing predominantly index options in this group. But Rick likes free butterflies. Me too, Rick. I converted a couple of them to free butterflies today, actually. So that'll be one of the strategies that we'll talk about is how we can evolve a butterfly into a free butterfly. So I'm going to go ahead and end this now and use them as hedges. That's going to be part of the class as well, is how to hedge long positions with butterflies and or variations of butterflies. So let me end this poll. I'll share those results. So this is perfect, dovetails right into what we're going to be talking about today. So I was hoping those would be the results. Do you fear the volatility is the next question. So I've seen a lot of people comment that they're not comfortable trading in this market right now. Okay, this is pretty,
it's almost split down the middle.
Yeah, it's pretty evenly divided here. Again, I'll share those results. Tom, you can see those. I can see those. I don't know if the rest of the world sees them as they're coming.
You probably have to share them. Yep.
Okay, so looks like the bulk of people have answered here. So I'm going to end that poll and share it because this one's really interesting. So you can see most people, I mean, a majority of people are saying makes me a little queasy. So you're really going to like what we're going to share today then, because you should not fear these markets. These are the markets specifically for butterflies that it's just a perfect type of market for them. And again, hopefully by the time we're done here today, you'll have a sense of that and understand a little more about why now, specifically now in our markets, is the time for butterflies. And then last question here, just curious on people's, what I say they're people's why. Why do you trade? Is it to build long-term wealth? You really don't need the money now. You got a job, whatever. You're looking for supplemental income. You're financially fine. You just want something to keep you busy, have some fun. What's your focus? So, all right, perfect. Okay, it looks like we've settled out there. I'm going to go ahead and share this one as well. So as I had suspected, the bulk of people are interested in supplemental income. That's to some extent what I do. I mean, for me, I kind of fall into those last two categories, fortunately, but I love doing it, and it's great supplemental income. And I'll share some of that with you here, and you'll be able to see some of my results as we get into this today. So I'm going to stop sharing all the polls, and then I think I can start sharing my screen. And
yep.
Okay. So let's see here. All right. So are you seeing my presentation screen there?
I do.
All right. I'm going to close up my little video screen here. You don't need to see my face at this point. So, and I will get into the disclaimers and stuff here in just a second. So our class today is going to be on butterflies. And first, just a little housekeeping. Yes, this is going to be recorded and shared. So if people join us late and you see people asking, please just feel free to chat back to them, let them know that. I'm going to have some question periods along the way. So I'm one of these people that I kind of need to focus on what I'm doing. So it's very difficult for me to be doing the presentation and also kind of watching the chat. So about every few slides or so, I'll pause and I'll ask you if you have any questions to drop them in at that point, if you would. And I will answer as many as I can. So at the end, I actually have a trade that I put on today that obviously the market is closed now, but I will show you that. I'll show you how the alerts will work and kind of what they're going to look like. And if our market stays kind of where it is today or moves up a little bit tomorrow, this may be a great trade to consider experimenting with. It's a good sample trade for you to put on in paper, play with, kind of get an understanding. So we'll get to that at the end here. My email is steve@arrowmere.com. So feel free to jot that down if you want. And if you have any questions from the session today, you can email me, or I'll also show you the forum at ArrowMere. We have a forum specifically for this butterfly class, and I'll of course be addressing questions there as well. So the standard disclosure, Tom, I don't know what the practice is. Do you read this? Do I read this? Do we just tell everyone, pause your video and read it later if you want?
I can read it real quick, just the red part, really. So ArrowMere Corporation or Steve Ganz are not broker-dealers or investment advisors. It's for educational purposes only. Options, futures, bonds, and currencies, all involve risk, are not suitable for all investors. Past performance is not necessarily indicative of future results. Personal use only. If you want to read the whole thing, just pause the recording or go to the bottom of any of our web pages, and you'll read the full disclosure in all its glory. So I think that covers it.
All righty. Now we got that important stuff out of the way. So I want to kind of tell everybody what it is we're going to cover today, kind of give you a sense of where we're going to go. I'm going to move fairly fast here. But I will answer the questions when we get to those break periods. And obviously this is going to be recorded for you to go back to as well. But I'm going to give you a little about me, kind of my trading journey and experience. I want to do a quick overview of our current markets so that you understand why now is the right environment for butterflies. And again, I think hopefully that's the number one thing I want to drive home today is don't wait on this. Our volatile markets right now are the time that you need to be getting involved in these. We're going to look at butterflies versus iron condors versus put credit spreads, strangles, all those sorts of things, and kind of see how they react in these big swings. We're going to talk about, as you probably know, this is a preface for a class I'm going to be doing. And we're going to talk about what the class is going to cover. We're going to talk about coaching, alerts, things like that. And hopefully some of this will be of interest to you. If it's not, no problem at all. I've just learned a lot going through this process and want to share it. I like to teach. So a little about me and my journey with butterflies. So basically, I've been an active trader for over 30 years. I've traded everything from stock to futures to stock options, options on futures, index options, you name it, I've traded it pretty much. I've been a full-time trader at various points, meaning I didn't have another job other than my trading. Personally, I kind of find that my trading is better when I have a job because I'm not sitting there micromanaging my trades. I do currently work for a company called Option Alpha, which specializes in algorithmic trading. And at some point we can get more into that as well because it's pretty interesting. Great company, great software. And I'm kind of a senior platform specialist for them. I've taught trading classes for a company called Online Trading Academy and then also independent students. I think I saw one of my guys, JJ, in here. So hello, JJ. I focused the past 2 years on a variety of butterfly trades. And that's kind of the important part is that I've done everything from trading tick charts, trying to day trade tick charts to swing trading stock and trading the futures. And I mean, I have traded everything. This is the one thing that I found that is consistent for me and also is the least stressful for me. If I don't look in on it for a day or two, it doesn't make a darn bit of difference in most cases. And again, we'll get to that as well. I've probably made over 2,000 live and paper trades of various butterfly styles, and I'll show you kind of the results of that research here in a moment as well. I am on Facebook. I got to tell you, I'm not a big Facebook fan. I'm not a big social media fan, but I'm there. So I'm married for over 40 years, beautiful wife, Vicky, 3 kids, 4 grandkids. I love mountain biking and I love touring on my motorcycle. So that's a little about me. And that's my trade setup. You can see below there, it's that big monster 49-inch screen and my laptop plugged into it. So the new M1 Mac, which is phenomenal as well. So a little about my butterfly journey. So butterflies were introduced to me a little over 2 years ago by a good friend of mine that manages an international hedge fund. And he was telling me that most of the trades that he does for his fund are butterflies. And I had heard of them before, didn't really know a huge amount about them. So he kind of, helped kick me along and kicked me into gear down the research path on them. So I went and I did a whole bunch of historical back trading, which I'll show you here in a moment. And then I did a bunch of real-time paper trading. Now, the difference between these two, historical back trading, is you kind of spin your platform back to a point in time and you put those butterflies on and then you march them forward a day at a time. And even though you try to pretend you don't know what the market did, in the back of your mind, you kind of know what the market did. And there is a tendency to adjust your trade because you know the market's going to go a certain way in the next few days or months or whatever. If you've traded the market as long as I have, you kind of remember big moves. So historical back trading, it's good to do, but unfortunately, we as humans kind of know what's in the back of our heads there, and we remember some things that might skew those a little bit. So then you do real-time paper trading. So a little over a year ago, I started paper trading butterflies real-time in the market, but still paper trading them to kind of learn how they move, what the adjustments are, those sorts of things. And then I went into live trading. So we're going to look at these 3 different sets of results, and you can kind of see how they've held up over time. So, but I also want to discuss, are butterflies a new options trade? Well, of course they're not. It's not some magical new thing. They've been out there for, I think Tom Sosnoff on the floor used to trade a lot of butterflies. I think Tony Batista did. I mean, most anybody that's ever been on the floor of the exchange largely traded butterflies, and largely for the reasons I'm going to share with you today. Everything I'm going to show you today, everything that I would ultimately present to you in a class, it's probably out there in the world. It's just that I've gone to pull it all together, tested it, traded it, and feel like I have hopefully put together a good composite of educational content combined with live alerts, which we'll talk about more in a few minutes, that will help you get down that path. Students also are going to get, because I said all this content is out there, I want to be able to share a lot of what I consider to be the best content out there with people that end up taking the class. So again, these are going to be all sorts of different sources out there. Some of them might be YouTube videos, some of them might be articles on other websites. At the end of the day, that's the goal, is I want to give you as much content and education as I can. So let me talk a little bit about the back testing and things, and then we'll pause for questions here in a few minutes. So this is the historical back trading. So this is the part where I spun back the platform I use called OptionNet Explorer, and there are different ones out there. We'll talk about that a little later as well. But I went back in OptionNet Explorer and I just started putting on these trades and managing them. And as you can see, the results, the paper results, were very, very good. But we did run into this period of time starting in 2018 to late 2019, where the butterfly concept chopped sideways. So part of what we're going to get into in class is, when does that happen? Why does that happen? And how might you change your trading as a result of that? But after I did all this back testing, I came to the conclusion that, wow, I need to now trade this in paper, but real time. So from March of 2020 to October of 2021, I put these on in real market time every month. And I will tell you right now, this is not normal. Do not expect 25 out of 25 winners. These have high win rates, but don't in any way, shape, or form expect that. But I was, again, very impressed to where I'm like, holy smokes, this is something I need to really start doing. So back in July of last year, I actually started trading these live. These are my live trading results. So you can see still pretty darn good results, 82% winners. And I will say these are a variety of different butterflies. It's not an exact specific technique, like it's not an A14, it's not a rhino, and I'll talk about that in a moment as well. It's just butterflies in general. And again, we'll discuss why that is in a second here. So I know a lot of people said they were in here for the quote unquote income aspect. So I wanted to share this with you. So this was my trading account. You see down there at prior value down at the bottom. So at the start of February, that account had 150 in it. At the end, it had 164, 464. So basically, roughly $15,000 gain. So I pulled out my paycheck. That's my paycheck for the month. Again, that account has 150,000 value in it, so about a 10% return for the month of February. I did take a screenshot this morning of my options account, and month to date, you can see it's currently at about 159. So right now, again, 9 days into the month, we're up about $9,000 on that 150. Obviously we have no idea where that's going to be at the end of the month, but I'm expecting to pull another nice paycheck. I didn't track anything really prior to February because I was putting on these trades across multiple accounts, and I hadn't yet established just a single account for this purpose. These are my options positions as of March 1st. So these are all live variations of butterfly trades, variations of expiration. You can see they're all in pretty nice positions. They all have pretty flat T0 lines, which in case people aren't aware, there's this line that goes along the software here. We'll talk more about that in a few minutes. And it is that line that basically defines or helps show you what risk is in a trade and is not in a trade. And then real quickly here, we'll just take a look. So these are predominantly the same trades. That's 3-1. This is as of today. So if you just kind of pick one or two of them, maybe look at these two over on the side here. They're at 4,900, 4,600 as of today. They were at 3,500 and 2,200 a week ago. If we pick a few over here, you're 1,200, 900, 2,500. So 2,000, 1,400, 4,600. So all of these are doing exactly what I want them to do. They're just kind of chunking along, no alarm bells going off. And somebody just asked, I did see that flash up there. Again, we'll get to questions in a second, but what amount of my account do I allocate? Right now, I have approximately 90 out of the 150 that is currently in trades. That percent will vary depending upon the juiciness of the market. The juicier the market gets, the more comfortable I am putting more money into these butterflies. But generally speaking, I don't get above 2/3. So that kind of is a high water mark for me. I always like to keep about 1/3 on the side. So who should take this class? So anybody that has historically feared a volatile market, and again, you'll see in a few minutes kind of how these act in volatile markets and why you don't have to fear them. Those wanting to learn how to profit from some of the juiciest delta neutral trading you will find, again, and you find that in the more volatile markets. People wanting to learn ways to potentially hedge existing long equity investment positions. So while I do trade these butterflies for income in this particular account, In my other long-term investment accounts, I trade the butterflies a little bit differently, and I trade them in a way that are designed to kind of hedge my long-term investments that exist in those accounts. And as we get into the class, that's something we'll cover as well. People that want to understand the ins and outs of a wide range of butterflies. People that recognize that a specific rule set has their own set of issues. Now, what I mean by this, and I don't want to take anything at all away from people that have developed great trading systems like Amy's A14. I've traded that. I took her class and it's been killing it. I love it. It is a very specific rule set. It is a form of a butterfly. And again, it's a great way to learn. Now, I've taken Amy's class. I've taken John Locke. He's got a bunch of classes, all of his X series classes, his M series classes. So, and please also understand that what I'm teaching here, I am not going to get into the nuts and bolts of their work. That's not fair for me to share somebody else's, specific system. But what I do want to do, one of the challenges that I have found with rule set systems is that depending on what platform you're on, the Greeks can be different. So I can go and I can put up a butterfly trade, for example, on OptionNet Explorer, and I can put that exact same trade up on OptionVue, and I can put the exact same trade up on TOS, and all of them will show different Greeks. They'll show different deltas, they'll show different gammas, etc. So if you have a trade that does follow a very specific rule set, you can sometimes be out of sync with the developer of the trade just because you happen to be on a different platform. So part of my goal is to teach people how to trade butterflies in general, whether they're short-term, whether they're long-term, and give you the knowledge and the skill set that you can come in and you can adjust these yourself without having that exact specific rule set. So who should get the most out of this class? People that have a general understanding of options and Greeks, people that have a basic knowledge and expertise with some sort of analytics diagrams, whether it's using the analytics page on TOS or OptionNet Explorer, OptionVue, whatever. People that have done options trades before, they hopefully have a brokerage account. And then I would urge people to be willing to consider a subscription to something like OptionNet Explorer. Now, I have no ties to them. I use their software. I pay for it. I'm communicating with them to see if I can get some sort of a deal through them. I know Tom Arrowmere has a deal in general. I'm trying to find something a little bit better, maybe. I don't know if I'll achieve that or not for students of my class, but we'll see.
We've got a 10% discount for new subscribers.
Okay, perfect. So I have some different things I'm communicating with them on that may possibly be better than that. I don't know. We'll see where they come back with me at. But again, you should probably consider something like that, and you'll see the value as we go forward. So I had put in here, how much time will you need to spend managing your trades? And we're going to get to some questions. So generally, I don't look at my trades during the day. These are the types of positions that, quite frankly, you really don't need to in most cases. And again, you'll see why here in a minute. But with the T0s as flat as they are in these trades, because they've been entered properly up front, huge swings in the market are not really going to impact these. So I wait until usually the last hour of the day. I'll go in and I'll take a look at that time, and I might adjust something. And as you saw, I will usually have, 10, 15 or more trades on at a time across a variety of different accounts. And I maybe adjust one or two of them a day. So I really don't have to spend a lot of time on these. So now I want to get into some questions. So if you do have questions, go ahead, please, and drop them in the chat. I'll cover as many as I can. And let's just see here what all we got. Is my February normal? Again, it's hard for me to tell. I should probably scroll up higher and make sure there's nothing else. Yeah, I guess there is. Let me go up a little higher here. Sorry about that. Will I be talking about at the money and directional butterflies? Absolutely. That's the bulk of what I do. Condors as well. Yes, I do consider condors to be a version of a butterfly. You know, the center strikes just aren't exactly the same. So I do use things that are kind of like the boxcar trade, but again, don't have necessarily the specific rule set behind them. But yes, I use those as well. And I use those largely for hedging purposes, maybe hedging an equities account. What amount do I allocate? I think I'd answered that one. Usually not more than 2/3. Is February normal? I would say probably not, but at the same time, I have to tell you that I haven't had that account set up trading just butterflies for an extended period of time. But if you did look at my results, when we showed the graph of my results, you saw that obviously I had been very profitable with those over the past 16 months. Do I always do 100 strike difference? No, there's a number of reasons why we might change that. And again, we'll have to dig deeper into that. That won't be something I'll be able to address here today. What are you doing if the market's in a low volatility state? So butterflies aren't as juicy. They're not as good or as safe in a low volatility state. So during that time frame, that's when my size really shrinks up. I have them on, but I'm doing it in smaller size. And I would not expect to have 10% returns during a low volatility market. But in the next section of my presentation, we're going to take a look at our expectations for the market going forward. Suitable for a small account of 50, absolutely. 5K might be pushing it a little bit because you don't have a lot of flexibility for adjustment there. You can only put on, with 5K, you can only put on one, maybe two butterflies, and it's a little hard to adjust if you only have on two. I won't say it's impossible, but it's tougher. You could also go to SPY instead of SPX and make the trades in SPY, but you have to understand that the commissions are going to be a much higher percent of your P&L that's going to get eaten up there. So yeah, it's dicey at 5K. Do I put on a lot of different butterflies instead of a single big position? I guess it depends on how you define big. I got butterflies on that are, 50 butterflies in size. So you got 100 short strikes on there. So I don't know. Everybody has a different idea on what is big. For the purposes of class, every butterfly is going to be 10 butterflies. And then you can size up and size down based on that. Average length of trade varies all over the board from 14 DTE is probably about the shortest I usually go, up to 90, 120 DTE. There are specific reasons why you get out that far that we'll get into as well. Average is probably in the 65 to 14 day. Do I adjust butterflies? Of course, yes. Now, many of these, the shorter term ones, you might not have to adjust. I know in Amy's class, I've got a whole bunch of A14s I've pulled off without a single adjustment. Just hit your 5, 6, 7% profit and you're out. Minimum account size, I think I adjusted that. Trading platform, I do use TOS. You probably don't need to use TOS because I would urge you to use ONE for analytics. Do I trade 0 DTE? I will tell you, Jeffrey, that at Option Alpha, where I work, we have people that have written bots that trade 0 DTE. I personally do not. I don't want that gamma risk. I don't want to have to sit in front of my screen. To me, that's more of a day trade, and my day trading days are over. I don't like that stress. Typical starting B fly, hard to answer that one. Depends on market conditions. Is initial setup balanced? Again, hard to answer that one. The one that I'll show you at the end of the day today is balanced, and we'll see why. Particular time we prefer? Nope, I don't think it makes a darn bit of difference. I'm very patient. I lay my price out there and I wait to see if I get hit. I don't aggressively pursue a trade. Does it work in low volatility? Not as well. Yeah, typical amount in the trade, that again kind of varies all over the board. Do I trade long volatility trades? Yes, some of the adjustments that I'll use are calendars. I don't usually trade calendars all by themselves. And even in adjusting with calendars, I like them, but they are difficult to model and people don't understand them very well. It is something that we're going to spend a lot of time in class on, is a better understanding of calendars and the fact that you can't trust the modeling on them. Do I construct my flies such that they have different adjustment points? I'm not totally sure I understand the question, but I think the answer to that is yes. Is XSP a good option for a smaller account? Yeah, but again, I would say that the percent you're going to pay in commission is going to eat up much of any chance you have at gains. It would be good practice and it would be a good way to learn, but I would not expect to have any sort of real income come off of it. So there will be a couple other question periods here. So we're going to move on right now. I want to look at the overall market environment. So there was a number of questions there about the market environment and the volatility. Let's see here. So here is the S&P 500. This is a chart that's, I don't know, 15 years, something like that. And I want you to specifically look at this center area here. So the center is a ATR, or average true range, that the market travels during a day. And then the volatility is closely aligned with that. And we can see that the ATR, we've gone to where we're moving 155 points. Now, excuse me, this is actually a weekly chart. So it's 155 points in a week, where we used to only move 30 S&P points in a week. So this is huge volatility. And this is why butterflies are working so well and why this is the environment that you want to be involved in them. If we look at our current market, now this is a daily chart. One of the things that you'll notice over the past few months is that our market is making lower highs and lower lows. Right now, we are in a downtrending channel. Doesn't necessarily mean that's going to continue, but as long as that continues, volatility will likely be elevated. And many people, I was in Wayne Klump's session yesterday with the Sleepwell portfolio, and Wayne specifically was talking about his expectations, and he's really good at the macroeconomic thing. And he was talking about all of the headwinds that we have against us now with interest rates, inflation, et cetera, that will likely impact the markets going forward. So if you look at a technical analysis, big picture technical analysis here, it's not inconceivable that we could have a pullback to this 3,600 range. That would be technically still not abnormal in today's market. And a couple reasons why I and others think that could be possible. This chart came from Fast Graphs. Chuck Carnival is his name. And if you're a fundamental person at all, go look for his videos on YouTube. Oh, excuse me. I went to Fast Graphs. Didn't mean to go to Fast Graphs. Sorry here. So Chuck has done a great job of putting together some software that looks at the fundamentals of companies. And I don't want to go too deep on this, but there's something out there called the PE ratio, the price to earnings ratio, which is essentially this orange line. And that orange line basically is what the S&P 500 has historically traded at based on the amount of earnings that companies produce. The black line here is the current price of the S&P. Now, these things tend to stay largely in sync. In other words, as companies' earnings improve, people are willing to pay a little more money for those earnings. Right now, we are way disconnected on this. And you've probably heard, if you watch CNBC or anything that's fundamentally based, you'll hear people talking about how our market is overextended. So this is one of the ways that people measure that. Now, Wayne actually shared this yesterday in his session. It was pretty interesting. This is Warren Buffett's S&P overextension chart. And I don't know all of the history on this, but basically it is also showing that we are 50% overextended right now, meaning that this black line is probably more around where the market should be trading at fair value. So for those reasons, combined with just the headwinds that we're looking at of inflation, higher interest rates, commodities, potential wars looming, et cetera, I think that our market is probably going to have some volatility going forward. And again, perfect time for butterflies. So this actually is, my student JJ mentioned this to me the other day, and I really liked it. So JJ, hopefully you don't mind me stealing this from you. It's not your knowledge that'll make or break you, it's your emotions. At the end of the day, your trading has to be comfortable to you. So that's when traders really come into their own, is when they find something that, this doesn't hurt me. This doesn't make me freak out. I'm not sitting there the night before watching the futures and, oh my God, they're gapping down 100 points. I'm going to get slaughtered in the morning. For me, taking all that out of the equation was key. So I want to look at how these butterflies hold up against other common trades that people often try to make in volatile markets. And we're going to go specifically back to February 23rd, where our markets gapped down 100 points. The story, by the way, that I'm going to show you was virtually the same 2 days ago. It's just that I built these slides a while back. So, but the end results were essentially the same. So we got $100 gap or 100-point gap down overnight. Now, if you had on a put credit spread that you had put on the day before, and all of these are going to be in 5 increment sizes, so 5 spreads using essentially the same spread that a butterfly might use. And I know a case can be made that, oh, well, I would size it differently, I would position it differently, et cetera. I get all that. The thing I want people to look at here is what happens when you get that big gap down. And in this case, this trade was down $2,500 from the night before when it was put on, and then after that gap down. So if you were to put on a straddle in that same environment, your gap or you would be down almost $9,000 the next morning. If you did a strangle, down about the same amount the next morning. If you got on a butterfly that you put on the night before, that was actually up $285 the next morning. So to me, this is like, whoa, this is so cool. I don't have to freak out now about these big monster moves. So these are my live positions that same night. So Wednesday night, 2:23 at the close of the market. This was my basket that I had open. Obviously, I don't know the market's going to gap down 100 points overnight, but you'll see the T0 lines and all these flies are pretty darn flat. So if it does, it's like, yeah, okay. I don't know what's going to happen for sure, but I've got a pretty good idea. So when that market gaps down, we start looking at these. Well, this first trade was up $1,255. Now that trade is actually a slightly positive delta trade. So common sense would dictate that should be down money, but because of the spike in volatility, it's not. This one was up 215. That one was actually down 65, up 215, up 650. So I'll just drop these in there so you can kind of see. So that's what the same basket looked like the next morning on the open. So again, market gaps down 100 points. Under normal circumstances in my prior way of trading, I would have been freaking out. It's like, okay, no big deal. So we can take a look. Basically, you don't need to fear the volatility here. You can embrace it and embrace it basically with butterflies. So let's pause there again for questions. Let's see, were those put credit spread strangle straddles compared by the same margin used? They were not compared by the same margin used because depending on what type of account you have, whether you're PM or Reg T margin, et cetera, it's kind of hard to tell. And of course, the ones that were straddles and strangles, they were not defined risk trades. So I understand that it's probably not a direct fair comparison. I don't know a way to do a direct fair comparison. They were all 5, they were all sized in 5 as far as size, as far as the number of contracts that were put on. Do I start trades with a slight negative VE delta. I'm not sure what negative VE delta is, but no, it varies depending on the market conditions and the current place we're at in our market. And again, that's part of the class that I'll be showing you is how do we take a look at the big picture market and see where we're at as far as, volatile market. Are we expecting up moves, down moves? Again, the nice thing about these is we don't need to be overly concerned about that. Unlike day trading, or going long or short something, we don't have to be right. We just can't be horribly, horribly wrong. So the next question I see there, we're going to get into here in a minute. So obviously, this is for a class I'm going to teach. I'm kind of giving you the overview of butterflies. So what are we going to include in the class? So there's two ways of basically learning these trades. One is following rule sets versus understanding the trade. And I am not going to take anything away from rule set trading. They certainly, they're kind of what got me where I am today, because I traded and bought enough different programs that I learned how to trade John Locke's bearish butterfly and the X4 and the M3 and Amy's A14 and even Tom's and Dan's road trip trade. I subscribed to that for quite some time. So there's nothing wrong with that at all. And over a period of time of trading all of those different things, you'll start to learn that they're all just variations of each other. And if you learn to understand the core butterfly itself, the specific rule sets become a little less important in my mind. So again, those systems can be great learning tools. Don't want to take anything away from them at all. If you're a rule-based trader and you want to have a rule set, that's probably not going to be where I will be. So I want you to understand when we're going to make a change, why we're going to make a change, but it's not going to be based off of a Greek, because everybody's Greeks could be a little different. So in the class, we're going to open and manage sample trades with a really wide range of variables, all different DTEs, different wing widths, different underlines. We'll do some in SPX. We may do some in RUT. Heck, we may even do some around Amazon and Google, maybe around earnings. I've done those as well, because of course, volatility is really up as you're getting close to some of those earnings dates. Each trade and adjustment will be via a brief video. I'm going to show you an example of that in a minute as to how I plan to do alerts. And the key there is I don't want to just put out a set of numbers to you that says, sell this, buy this, sell this. There's going to be an actual video that will show you the current position and then the potential adjustments we're going to look at, and then why we might choose the adjustment that we're going to choose. So again, I'll show you a sample of that in a moment. And as we've already discussed, one of the issues with Greek-driven alerts is that the numbers can vary from platform to platform. So what all is going to be in the class? Well, there's going to be at least 1 to 2 new sample trade ideas a week. So possibly more, but at least 1 to 2. There's going to be the alerts to manage the sample trades during the period of class, which is probably going to be 4 weeks, maybe 5 weeks. You'll get all of those alerts to all of the trades that we open. There'll be a live weekly session that we'll do where people can come in, ask questions, etc. We'll look at all of our open trades that we have. We're going to explore any trades we might have closed. We're going to look at what we're expecting in the market next week. Of course, nobody has a crystal ball, but we're going to look at what might happen and how we might react if those things happen. Again, I'll provide an extensive set of links to the best public content I have found out there, which supports what I'm going to be teaching. The trade ideas and adjustments are all going to be shared via video with detailed explanations. Access to my email address, and again, a great ArrowMirror forum. Tom set up a forum for all of this, so I'll be addressing any questions in there as well. So I'm going to hit, again, real quickly, some questions here. Since butterflies are short Vega trades, when the market gaps down, shouldn't the trades get hurt badly? Again, Vega is one of those things that doesn't quite work the way you think it does. So no, obviously you saw that when the market gapped down, they did not get hurt badly. So, no, they don't. Will the classes be recorded? Yes, every class will be recorded. This one is being recorded as well and will be available to everyone. So the construction of butterflies, we're going to get real deep into this in the class. How much time will adjustment ideas be posted before end of day? Well, again, Ryan, I don't normally even look at this stuff until I'm in California, a little north of San Diego. So until around noon or so my time, so about an hour before the market closes, and when I'll start to look at those. How to handle difficult fills when adjusting the trade. I will tell you that the way we're trading these, I don't have a difficulty with fills. I am very patient. I will put an order out there. I could let that order, set for hours or even days in some cases. I am not in a rush to get into these. And I'm not in a rush to get out of them because we're in early and we're out well before we get toward expiration. We don't have all of that gamma risk that churns your gut. So again, it's not a problem. If I give you an adjustment and you don't get to that adjustment till tomorrow, in 90% of these trades, that is not an issue. So building butterflies is like building a house. We need to look at the location, the site. Now I'm going to say the site on the chart. What is the weather like? What's the ground conditions where we're building? Is it a choppy market? Is it flat market? How are we going to build this? What sort of materials? Now, by materials, that could be, are we going to do it in SPX, RUT, et cetera? And how long do we want it to last? That's kind of our DTE, our days till expiration. Do we want this thing to last 14 days? Do we want it to last? I've got a couple of these on right now that, as we all know, September is historically a rocky month. I've got some of these on already that are going to be maturing as we get into September, because if we get that normal September pullback, they're going to provide me with a nice paycheck. We're going to talk about the structure of the butterflies. Are they going to have 1 tent, 2 tents? Are they going to be on a hillside? Are they going to be skewed? What tools do we need to do this? If you're building, it's power saws and hammers. For us, it's a platform, it's ONE, et cetera. When do we move or sell our house? If we're building a house, when are we going to sell that house? How much does it cost if we want to move that house to a new location? In other words, if we want to take our butterfly, our tent, and we want to put it at a different point on our chart, how much is that going to cost us? I will tell you there are conditions that we'll get into where if I put on a trade and we get a big market move that goes against my trade, there are a number of scenarios where I can lift off that entire butterfly, move it to a new location, and reset the whole thing, and in many cases for free. So that's going to be one of the things I'll teach you to look for as well. So let's talk about, again, kind of using the building analogy. Let's talk about planning and design, okay? So hopefully you can see that now is the time for butterflies. We want to build these things with relatively flat delta. When we have this higher volatility, you can do them with greatly reduced margin and buying power. You have a much lower entry risk. They require much less management when you put them on right. So again, right now, if you're ever going to learn these, this is the environment to learn them. We're going to talk about the potential symbols to trade. Now, I mainly trade SPX, sometimes RUT. At this point, I personally don't trade SPY and IWM just because the commissions are too large, relatively speaking, for your gains. But if you have a really small account, that may be something to consider. The ES, I have put on trades and butterflies with ES options. I haven't done it recently. Tom and I actually talked about this the other day, and I'm thinking we might actually do some in classes because there are some benefits to it. And then also putting on butterflies around common stock. Again, I have done that successfully around Google, Amazon, Apple. So as we get into earnings season, certainly that's something we can consider as well. We're going to get into the detailed anatomy of a butterfly. Where does the money come from? How does a butterfly actually make you money? How can a butterfly potentially be losing money when it's when the market is right smack in the center of your tent? That can certainly happen. Again, it happens less in our current environment, but it can certainly happen. And I've got examples of that we're going to discuss, and discuss ways that you can avoid that, because nothing's worse than putting on a position and the market does exactly what you think the market was going to do. And all of a sudden you're down $1,000, but yet you're right in the middle of your tent and you're kind of banging your head against the wall saying, what I miss. So we'll get into that. We're going to talk about flat butterflies, upside broken wings, downside broken wings. When do you use them? When would you use a call only butterfly, a put only butterfly, an iron butterfly? How do you know what width butterflies to do? We're going to look at skip butterflies, or some people call them Christmas tree butterflies. Then in our second class, we'll get into the site selection and construction. So what are the best market conditions to put these on and why? Obviously, you've kind of seen a good portion of that today. We're going to strategize the application of your butterfly. So what I mean by that is this butterfly put on for income purposes in the short term? Is it put on for hedging purposes in the long term? Are you putting it on with certain market expectations? So we'll look at market conditions in our weekly sessions and then decide what sort of structure we want to build. We're going to talk about the duration. Why would we use a shorter term versus a longer term? Applying technical analysis. So in my session, or in my my little alert that I'm going to play for you here at the end, you'll see when I put out a trade alert, there's going to be a little bit of technical analysis that goes into that. And then also, of course, in our weekly sessions, we'll get into that. We're going to talk about lagging into a trade with overlaid butterflies. So this is kind of one of my favorite things to do, is I'll put on a specific type of butterfly with the full intent of lagging into it in a bigger way over the coming days as the market moves one direction or the other. We're going to talk about hedging long portfolio with a butterfly or a moth. You probably never heard of a moth before, quite frankly. I made that up, but a moth is going to be a big, fat, slow-moving version of a butterfly. So I'm going to call it a moth. When and how to put them on, the IV impacts of butterflies. I want you to fully understand how to evaluate your trade. Understand, where's it going to win? Where is it going to lose in each different market scenario that you put it on? That's probably the biggest thing I find with students, is they'll put a trade on and then all of a sudden they're seeing some numbers that look a little funky. The trade is actually doing what it's supposed to do, but they just don't realize it yet. And they get a little freaked out and bail on the trade when they may have actually been in a perfect position, and again, just didn't know it. We're going to talk about using patient entry and exit techniques. Again, none of these are trades that you need to be fast moving on. And we'll talk about butterfly around earnings. So then class 3, we're going to get into what I'll call remodeling or adjusting, or knowing when to sell your butterfly. The best types of adjustments: when might you use a calendar, a vertical, a diagonal? When can you move into a new house for free? That's what I was talking about earlier. In some cases, you can literally pick up your entire butterfly, move it to a new location, reset your entire risk profile to be much more favorable to you, and do that at virtually no cost. Different techniques and timing for selling. I get this question a lot in some of the chat rooms I'm in. How do you sell or unwind a complex trade? So I had a trade here recently that I'm going to use as part of my class. It had 3 tenths on it, and probably, I'm going to say probably 100 different options in there at probably 15 to 20 different strikes. I mean, it was a big old monster. And at the end of the day, it wasn't worth the effort. It was a profitable trade, but for the amount of effort that went into that trade, it wasn't worth it. But I'm going to show you how to unwind something that ends up being very complex. Our 4th class, we're going to talk about our trading tools. OptionNet Explorer, OptionVue, TOS. There may be some other ones that'll come into play here before we get to that point. How do we send a trade from ONE to TOS? Many people aren't aware of that functionality, so I'll get into that a little bit. Some people have asked me, well, what if I don't want to get ONE? What if I just want to use TOS? Can I do it with just TOS? The answer to that is yes, kind of. If you're going to have on more than one trade at a time, it gets very convoluted. We will get into that. I will show you examples of how to do that, but I will tell you it's not easy. How many butterflies at a time? I don't know. That's up to you and your account. I mean, I usually have, again, anywhere from 10 to 15 to 20 open at this time. Maybe late in this, we'll also look at Option Alpha as a tool people might use. We can't yet trade SPX at Option Alpha, but we hope to here before too long. But it's a way to automate your trading in some cases. And I'll give people kind of a sneak preview at that. We will review trades in class 4, so students can bring in trades, and each week for that matter, if somebody has a trade, they're not sure where they're at or how they got where they got, we'll talk about it. We'll diagnose it and dissect it. We'll also talk about brokers. What are good brokers, bad brokers? What should you be paying for commissions? How can you, get them to get a little more competitive on their pricing? And again, I'll be providing a whole bunch of links that will support all of the information that I'm going to share with you. Then we'll have a 90-day bonus session where this is after class, probably about 2 months. We'll check in with everybody. Amy just did this on her A14. It was great. People came in with a lot of questions. And so we want to make sure that everybody leaves with a good understanding of what's going on. And we'll replay the top winners and losers from our class alerts. We'll explore and discuss alternate management of trades, review any trader questions and examples. We'll talk about platform best practices. I've got some things because, as you guys see, I have a lot of trades open at a time. I found some pretty good ways to manage those that kind of keep me from getting them all confused. And we'll get into that. And all of these topics are still kind of being finalized. So some things may change, or if anybody out there says, hey, I want to make sure you cover whatever, toss it out there and we'll see if we can work it in. So there's going to be a couple different components here. One of them is going to be the class itself, which is going to be at this point 4 weeks. I'm expecting them to be a week apart. We're going to start March 27th. And again, cover those items that you already saw. And then of course, there's going to be a 5th one that'll be that 90-day review session. And then we're also going to have educational alerts. So during class, you will get the alerts that I put out during class, but you can also subscribe to the alerts themselves. Now, I'm going to show you an example here real quickly of one of these alerts and kind of what it looks like. So what I want to send out to people, I use a product called Loom where I can just do a real brief video. So I'm going to play this real quick just so you can kind of see an example. This is an adjustment that I was making. So it's time to put a little adjustment on this trade just because of the potential for more downside market move. And I don't want to really give this up. I've got a nice, 7-8% profit in this trade right now. There's a couple different ways this can be adjusted. I'll be covering those in my class. And again, I'll be talking about my class on Arrow Mirror here on March 9th and giving more details on that. But a couple different adjustments we might consider here. The one that I'm going to do, and again, we'll explore more in class as to why this is probably the best move for this particular trade, is to calendarize some of these lower longs. So I'm going to go out a period of time here and make this adjustment to this trade. So that's my game plan on this one, and just thought I would share that. So that's kind of how I plan to send out the alerts. And again, the goal there is I want you to have context around them. I do know from previous experience that I've had with alert services is I would get an alert, I would go in and I get a set of numbers, I get 3 numbers and I kind of know what to do with them. So I would go into my platform and I would make that adjustment, not totally knowing what the core position actually looked like at that point. So when I send this out to you, you're going to see exactly what the position looked like before it was adjusted. And the reason that's important is I'll tell you that I have missed adjustments in trades before. So in other words, maybe I had on a big butterfly and somebody sent out an alert to make an adjustment. I put in the order, it didn't get filled or whatever, and I forgot about it. And then I go and I put in another adjustment that comes a few days later. Well, I'm adjusting something that didn't have the first adjustment properly applied to it, but I didn't really know that because I didn't see the person's diagram. I just saw 3 numbers come my way. So there were times when we got into a weekly session, and I'm seeing what the instructor was showing as what their diagram looked like. And I look at my diagram, it's like, oh my gosh, mine doesn't look anything like theirs. What did I do? And then of course you're racking your brain trying to figure it out. So the video alerts, I think, serve 2 purposes. One, it allows me to put context around the trade. Why are we going to do what we're going to do? And you can also see what the position looks like to make sure that your position looks the same. So in the alert service, you'll get 90 days of additional alerts beyond those that are going to be provided in class. Again, 1 to 2 sample trades a week. Any adjustment notices that happen during the week as well. We'll do that live weekly review of all of our open trades and adjustments, and we'll talk about plans for the coming week. The completion of the alerts to all trades that are going to be open during class. So some of the trades that we're going to open during our 4 weeks of class, they're going to be longer term trades. They might be 40, 50, 60 days. So some of those trades might not be closed during the time period of class. So if you want to follow those all the way through to completion, you'll need to be part of the alert service. And then the final thing is coaching as well. So I often am asked by people, about their unique specific situations. So I will have an option for 90 minutes of coaching, and we can address whatever it is you want. One of the common things I like to do with people is I give them a questionnaire that I have built over time and that I use myself to help build out a trading plan. It's going to have a whole bunch of questions in it that you're going to need to think about. And then from the answers to those questions, we can decide what might be the best trading style, technique, etc. for you. And it may not be butterflies at the end of the day. I don't know, but we'll go through that if you want. We'll explore your goals and objectives, determine how realistic they might be, help you determine the right style of trading and maybe the best vehicles to trade to fit around your goals, discuss any personal trade ideas, questions, and concepts, explore management concepts and ideas across multiple accounts, just talk about the realities of trading in general. In my exposure through all of the different companies that I've done teaching and things for, you'd be shocked sometimes the people that will come to me with questions like, I've got $10,000 in my account. I want to quit my $80,000 a year day job and start day trading full time and make enough money to replace my $80,000 income off of the $10,000. You'd be shocked how many times I get that question. So we need to talk about the realities of some of these things if you want to explore that. So let me get back to questions again, and then we'll wrap this whole thing up. So well, let me scroll up here a little bit. Steve, do you provide Tom with the slide deck? I have not, but there will be the video. Why is the course only 4 weeks? I believe that I can get all this great content over to you in a 4-week period of time. If it takes longer, I'm not going to leave anybody hanging. I'm here for my students. So if we don't totally cover it in 4 weeks, we'll figure that out. But I think the combination of the class plus the alert service is going to give you, at least 90 days. Well, actually a little longer than that, because the alerts will run 90 days after the class. Is my house in Ukraine? No, fortunately it is not. So I'm appreciate that fact right now. How about money management? Not totally sure I understand that question, but again, maybe one-on-one coaching if that's what you're looking for. I'm not certain. Size of account you'll need for the class. I would recommend $7,500 if you are in fact going to want to trade SPX. Again, you can have much smaller account if you're going to trade SPY. I just wouldn't plan on making any money trading SPY. You'll get you'll certainly get the flow of things, but it probably won't be a profitable venture for you. Let's see, have I traded butterflies on NDX, mini NDX? I have not. I've looked at it. I've experimented with it. I've traded RUT. I've paper traded NDX, but no, I have not actually done butterfly trades in NDX at this point. With SPY, no, I just don't think SPY will provide similar returns. I don't think it has the same volatility profile. It doesn't spike as much up or down because there are way more traders trading it. So the volatility, I just don't believe is, I don't think the swings are there as much. So again, you'll be able to learn the motions, but I don't think you should count on having much of any profitability out of it. Some of the things I do to reduce gamma risk, the biggest thing is the proper entry. If you enter these things right, gamma is not a factor. And do I hold in the last week? Heck no, never. If it's a 14-day fly, maybe we get into that second week, but not usually. I used to do some of that, and I will tell you that that took me back into my day trading where you get a gap down or something, and all of a sudden your $3,000 profit is a $3,000 loss, and I don't like playing that game. Is it an M1 Mac? Yes, it is. Do I work on one with TOS? Yeah, so that's a whole story unto itself, but essentially, right now, I will tell you that ONE has not been very helpful with trying to get this running on my M1 Mac. Prior to this, I had an Intel-based Mac. I ran parallels. ONE worked perfectly. I get the M1 Mac, which if you're a computer person, you know it's not Intel chips. And I can run parallels on it, and I can perfectly fine. I can run the 32-bit version of ONE on it, but because I have so many trades, it always crashes. And if I try to install the 64-bit, it will not install. So right now I have a separate PC, and I just remote desktop into that from my Mac. I would love to be able to run everything on one platform, but right now, no. Strategy requiring multiple trades open? No, it does not. I happen to like to have a lot of different trades open, but no, it does not require that. As you could see, a high percent of the trades are winners. So having multiple trades open will kind of even out that equity curve a little bit, but it is not necessary. And I am going to get to the trade for tomorrow. I'll show it in just a second. I'll get to all the fee structure. Getting whipsawed, again, we're early enough in these trades and we're making adjustments, and most of the trades are longer DTE, so I will say those whipsaws aren't that big of a deal. If you're trading shorter term, 14 DT like Amy's A14, they have been at some points, but I've even managed those really well, and I think most of Amy's students have. When can we join? Right away. I'll show you that link in a second. What is the range percent return on the entire account? Well, you guys will be seeing that going forward. You saw February was 10%. I'm up 9% in March right now. And that is the total account, even though I did not use anywhere near the total amount of the value of the account. Will the alert service, will one be self-sufficient to fish? I believe that a person, my goal is for somebody to be self-sufficient at the end of the class and the alert service. I do believe you will have enough examples that you will have gone through at that point that yes, I do believe you will be. They're not going to be sent just before the market close. They could be sent at different times during the day. It's conceivable I could send something out even in the morning that might say, hey, I'm going to lay this order out there and see if it gets hit. That's especially if we're going to close a trade. I like to do that a lot. Like today, I had 3 or 4 orders to close trades just laying out there. And all of a sudden, out of the blue, they start pinging. It's like, ah, cool. You know, I just trimmed that one back, or I just closed that one. Class is going to start the 27th of March, but anybody that signs up tonight, which you'll see, you'll start getting alerts right away. Average return from my trades, again, that varies all over the board, but I would say in general, I'm shooting for at least 5 to 10%. If I enter them right, as you probably saw, or you can scroll back earlier in this session, you can see that many of them are at 20, 30, 40% right now, and I still haven't closed them because I don't see any real risk in them. Do I get into portfolio allocation? If we do one-on-one coaching, we can get into that. Yes, I probably won't get into that as part of the regular class. How many times do I have to make adjustments on trades? It depends on the DTEs of those trades. A longer trade might require a few adjustments along the way. Shorter terms, maybe only 1 or 2 adjustments. But for the most part, if you put these on right, you're not doing a lot of adjusting. You're just doing some waiting. Separate ongoing alert service. Yes, I do plan on having separate ongoing alert service. I kind of suspect that hopefully people won't need it at that point. But if there's a demand for it, I will certainly be doing it. Do I get an end of day Excel sheet? No. We will every week. We will take a look at all of our open trades, but no, I'm not really doing anything with Excel at this point. What time during the day will the class be? So because I do have a regular job with Option Alpha, and I absolutely love that job, I'll probably be doing these on Sunday evenings or Sunday afternoon. I think is the time that's probably going to end up working best for me. So it's also good because the markets are closed. We can have time to think and focus on things. So that's the game plan right now. That would be open to some adjustment if everyone wanted something different, but right now that's kind of what I'm shooting for. So as far as the different options available to you, so if you want just the class, the 4 sessions plus the bonus, which will start on the 27th, and again, you will get the alerts during the class. It's $497. If you want the alerts only, if you already feel you're pretty good at butterflies and you understand how they work and you know when to do them, when not to do them, and you don't need the class itself, you want just the alerts, that's $497. If you want coaching, and then if you want any 2 of the above, pick the 2 you like, $895. If you want all 3 of the above, $1295. So that's going to be the different pricing. Tom already has all of that set up at this link right here at the info@arrowmere.com SJG. And here's the video. I did want to show you that other video. And this is the type of alert that I'll start putting out. You know, anybody that signs up tonight, if I do an alert tomorrow, and again, we'll see what the market's like tomorrow, but between tomorrow and Monday, I'm pretty sure I'll be opening something new. But let me just show you this video. This is the one that I put on today. Why can hold on here. I can't get that Zoom thing out of my way. So this is going to be a flat fly. And again, I'll just let hopefully, and I should also say that the structure of these is going to improve over time. The structure of these notices, I'll get more concise. I'll wander around a little less. I'll develop a pattern for doing these, which I don't have right now, but let me play this for you. I wanted to provide this as a sample of an alert and also to let people know that this is a trade that I'll probably be looking at putting on tomorrow morning. And of course, if you have an interest, I would urge you to consider paper trading this as well. If our market opens about where it is today or a little bit higher, if we look at the price action here in the market, which is not really important for these trades, but you want to get any edge you can. If you look, you can see we got kind of a downtrend line here of continually making lower highs. So under that assumption, I'm thinking we might get up here into the 43.20, somewhere in that range. Maybe we won't get much higher than we are now. And we're going to start reversing back down. Maybe we'll make a lower low, maybe we won't, but I do think we're likely to move back down here before too long. So based on that assumption and that scenario, I'm going to go ahead and I want to put on basically what I would consider to be a flat fly. And it's going to look like this. Now, I'm going to do everything for class purposes in 10 butterfly increments. Of course, you can slice and dice that however you see fit and however you want to put on your trades. But that's what I'm going to do on this one. And you can see here that we have a risk. If I put on 10 of those, we have an upside risk that's a little about 2,800. If the market pulls back, though, this thing's going to show some nice profit over time. And again, that's kind of what I'm expecting, is that the market might pull back. If the market does not pull back, there are a multitude of ways that we can adjust this going forward that should hopefully still allow us to produce some decent profit from it as well. So anyhow, this is how I will send out alerts. I'll send out adjustments in much the same way. And So go ahead, feel free to put this trade on tomorrow. I urge everyone to trade in paper during class. And then if you sign up tonight, you will get alerts going forward on this particular trade and what we end up doing with it and how we end up adjusting it. Thank you. Okay, so that, oh, and that, let's see, these were my current open positions as of today as well. So this is kind of the basket that's open right now. Again, some of these have just recently been open, so there's not a great deal of P&L in them. But anyhow, so that's kind of where we're at. Let me get back to our bonus software. I'm not sure why my screen. So somebody is asking about, I think they asked about option 2. So option 2 is just the alerts. It is not the classes. So I don't know if that was the question there or not. Let's see, is it possible to adjust the time frame of the charts in ONE? Yes, it is. I think you were talking about whether you're looking at a daily, weekly, etc. Yes, I do believe it is. I don't use ONE really for charting purposes, but I did today just because it was easy to show those in there together. Do we get class alerts for 4 weeks plus the 90 days alert after the 4 weeks? Yes, if you sign up for the class and alerts, you'll start getting alerts instantly. I mean, as soon as I make my next trade, you will get that alert, and you will get that for the period of class and then 90 days beyond that. So it's going to be close to, what is that, 120 days worth of alerts. Review the education options again. So that's what's up on the screen here right now. Option 1 is going to be the class itself, where we're going to get into all those different things that we talked about we're going to be discussing in class. And if it did not include anything that you want or think should be included, let me know, but I think it should be pretty comprehensive. So it's going to be the 4 class sessions, then a bonus session that'll be 90 days out, just kind of a catch-up session to, you know, see what issues people have, questions they have, etc. It'll start on March 27th. I'm expecting them to be based a week apart, usually on a Sunday. And during those Sundays, we'll look at open trades, any closed trades, current market conditions, plan for the next week. As far as the duration for each class, quite frankly, I'm here for you guys. So, I mean, I don't expect them to go longer than probably 90 minutes, but if there are people that still have questions, I will be there. And will you send out the toss trade order text that can be? No, I will not. And the reason I don't, it's not that I'm trying to be, you know, difficult or anything there. I want to actually show you the trade as opposed to sending out a set of numbers. I want you to see the actual adjustment in the video to understand what that's going to be. After 90 days, will there no longer be alerts? No, there will be an option. If you want alerts beyond 90 days, you will be able to re-sign up for that. That will be a subscription. So right now, the $497 or the $895 is going to cover you for those, you know, the class plus 90 days if you're doing the $895. And then if you want to sign up again for another quarter worth of alerts, it'd be $497 again for the next quarter. Could I also post the trade? Hard to see the strikes you had in the example. Yeah, I'll have to work out some of those details. I don't, let me enlarge this. Obviously, I understand everybody's on a different platform. Some people might even be looking at it on a mobile, but you know, right now the short strikes here are 4250, longs are 4300 and 4200 in this specific case. But I do think as this gets sent out in a video, I think you should be able to see those. You can also in ONE, you can also see them up here. So there's a number of different ways to see them, but this is new for me too, sending them out this way. So I like it because you can hear the context around it and you can see where I'm starting from when I do an adjustment or I do a trade, but it may need to evolve. I get that. Choice number 1 includes alerts during the time of the class itself. So for the 4 weeks around surrounding class, you will get those alerts. But it will just be the 4 weeks worth of alerts, and many of those trades will not have gone to completion at that point. So you just need to kind of know that going in. Classes are recorded, of course, yes. And then also in addition to classes, as Tom had mentioned, we have a forum, and all of these little videos will be posted in the forum as well. And then also in addition to the forum, you can email me, and yeah, so I think that should cover that. So remember, how much percent capital allocation do you recommend for the strategies? That's kind of a personal question. Again, I don't go beyond 2/3 of my account in these, and I do have some larger accounts that I'm trading them in as well. But again, those accounts have more long-term equities, so I'm doing more hedging sort of trades in there. But just spread it out over some different trades. And as you get into this, you will start to see and learn where your risk is, and you can make the judgment call. I mean, I've got trades that I do in much, much larger size because the risk is so minimal compared to the reward on them. If you select option one, no. Well, let me rephrase that. If you sign up for the class tonight, as soon as you sign up for the class, you're going to start getting alerts. Yes, maybe that's the best way to answer that. And if you sign up for option two, do we still get the alerts from the class? Yes, you will get alerts from the class, but you won't have the context that goes around those alerts. So they'll help you. If you already know butterflies, you'll probably be okay there. If you need to learn butterflies and understand when and how and why to put those on, I would recommend the combination of the class and the alerts. Will I be showing the minimum number of contracts? No. I say that. No, I probably won't. I mean, in general, you need to be able to put on at least 2 butterflies. So otherwise, they're just too hard to adjust if you just put on a single fly. But I will be doing them in 10 increments. So whatever you see my risk is, like the one that I just gave you the example of, I'm putting on had a maximum of 2,000 risk for 10 flies. Divide that by 10, you've got a $200 max risk in that particular one if you do 1 fly. Well, you need to have 1 for class. I will know more about that soon. It will certainly help. And I will say that in my opinion, 1 it's great at what it does, but it's clunky. The fact that there's not something out there in today's world that is web-based, that has the functionality of 1, just kind of boggles my mind. It seems like the world should be ripe for something like that. The fact that this thing only operates on Windows 10, although I have run it on Windows 11, the fact that it only operates on an Intel chipset, the fact that it's slow and clunky to do back testing on. Again, I still feel it's probably the best out there that I've seen, but I can't say I'm a huge fan. I would start from scratch if I could. But to answer the question, should you have it, I will tell you that it has been a huge, huge plus in my education of options and learning all sorts of different types of adjustments. So yes, I would highly recommend it. What does ONE cost? I pay for it by the quarter. I think it's, Tom, you might know better than I do. I think it's €350 for a quarter.
It's British pounds. I think it's around $500 or $600 for a year.
Okay, yeah, something like that. Again, I pay quarterly at this point because, again, there's another company out there called OptionStrat, which I really love their website, and they have great technical stuff in there, but they can't do any trade management at this point. You can't go in and adjust a trade and see how that would affect your P&L. You can't create a historical log of trades and then look at your results. So if anybody ever sees or hears of anything out there, let me know. That's web-based. But
so I just got it's a 15% discount, and it's $560 today with the current exchange rate. Another alternative is OptionVue. That's what OptionNet Explorer was modeled after, but it's much older. But it's been around since like the 90s, so the modeling is actually pretty good. So there are some choices.
Yeah, and I I don't know a great deal about OptionVue. I used both of them side by side a few years ago when I started getting into this, and there's pros and cons to each. At the end of the day, ONE was a little more intuitive to me personally. And then I also know that some other instructors and educators have dropped OptionVue in the past year or two because they claim it was modeling things differently. I don't know enough about that to be able to comment, one way or the other. I know OptionVue is totally reworking what they're doing right now. I saw, I think, a webinar on here about that a few weeks ago.
Yeah, probably a year and a half out though.
Yeah, exactly. Somebody was asking to see the syllabus again. And again, as we get to the syllabus, just know that if it's not on here and you think it needs to be, let me know. So I'll just scroll through this fairly quickly. But again, you can, of course, go and rewatch this if you want. And I see somebody says they love OptionVue. So again, I'm not going to talk badly about them. I just truly don't know. For our purposes in class, I will be using ONE. And let me just pop all those up. And if you want to snap a screenshot or whatever, feel free to do so. Or you can just come back and play this later.
Yeah, the recording.
So, oops. All right, everybody. I thank you very much for your time. Any final questions? Will we still have discussion sessions during the extended 3-month class alerts? Yes. So the alert service will include a weekly session. It will most times be live. I won't say that we won't ever hit a time where, hey, I'm on a motorcycle trip somewhere or whatever, and I pre-record something and put it out there instead. But the goal is for me to largely be there to answer your questions for most of those weekly sessions. The bonus was the fact that if you sign up tonight, you'll start getting alerts just as soon as I put them out. If you sign up for the alert service tonight, or the class tonight, or the class and alert services, you're going to start getting those alerts right away. Difference in alerts between, no, it's going to be the exact same trades, exact same alerts. It's just that in the third option where you combine the two, it's just going to be extended. It's going to be a total of 120 days. It's going to include the class alerts and then an additional 90 days. Stepping on strike. Yep, we will certainly be discussing on that. I can't tell you how many times I've done that myself, where I'm calendarizing something and I screw something up. Well, by calendarization of buying along, X amount of time out, stepped on another strike. Yes, we'll be getting into that. Thank you, everybody. I appreciate your time. And again, let me just get to the end here. I believe I covered everything, and I know this was longer than probably planned. So thanks a lot. I appreciate you considering this. Again, you saw my email, steve@arrowmere.com, if you have any questions. And then, of course, I think, Tom, you dropped the link into the chat for if people want to go out and sign up, correct? Or can you do that again if you would?
Sure. It can actually a little bit shorter. You don't need the info. You just go arrowmere.com/SJG.
There you go.
Sierra Juliet Golf.
All right. All right. Well, thank you, Frank. I certainly appreciate you guys being here. And again, feel free to email me if you have any questions. And I really hope I get to work with a lot of you, because I have to tell you, in all my years of trading, I'm talking to my friends and neighbors right now. I had one of them ask me today, Steve, I panicked. I got out of the market. I'm out of everything now. What are you doing? And I told them, they're like, huh? What? How's that work? So don't fear these markets. You have to treat them a little differently, but don't fear them. So We'll wrap up with that.
All right. Thanks, Steve. Looks like a good service, good class, and hope people can take advantage of it.
All right. Well, thank you so much, Tom. I appreciate it. Thanks, everybody. And I'll check emails in case anyone has any questions here later tonight.
All right. See ya.
Take care.
Bye.
Bye.